Bitcoin analysis for the 23rd of November 2025. Is this the bottom? Let's find out. Hey everyone, before we dive in, quick disclaimer. This is not financial advice. I'm just sharing my analysis and opinion. Always do your own research and never invest more than you can afford to lose. Trading and investing in cryptocurrency carries substantial risk of loss. Okay, let's get into it. So Bitcoin just took a massive hit, and I know a lot of you are either panicking or wondering if this is finally the buying opportunity we've been waiting for. Let me walk you through exactly what this chart is telling us, and more importantly, what the smart money is doing right now while everyone else is freaking out. First thing you need to see on this chart is the market status in the top right corner. It says bear, and the phase is deeply oversold. Now, oversold is actually a good thing for us as buyers because it means the price has dropped so much that it's due for a bounce. Think of it like a rubber band that's been stretched too far. Eventually, it has to snap back. Check out this Alpha Flow Pro reading showing over 102,000. This number tracks big money movements, like when whales and institutions are making massive transactions. When this number is high like it is now, it means the big players are actively trading. And here's the kicker. They're not panic selling. They're actually buying at these lower prices. While regular people are selling in fear, the pros are loading up their bags. Now look at the Elite Crypto Analysis panel. This uses something called Elliott Wave analysis, which sounds complicated, but it's really just a way to predict where price might go based on patterns that repeat over and over in markets. Right now, it's showing a bullish impulse pattern, which means despite everything looking red and scary, the structure underneath is actually setting up for a potential big move up. The trend shows bearish, yeah, but here's what matters most. That risk to reward ratio of 3.29 to 1. In simple terms, for every dollar you risk buying Bitcoin here, you could potentially make $3.29 if this plays out right. That's the kind of setup that gets traders excited. The heat maps show support at about $80,600 and resistance up at $107,400. Support is like a floor where buyers step in and stop the price from falling further. Resistance is like a ceiling where sellers show up and push price back down. We're trading closer to that support floor right now, which is exactly where you want to be if you're thinking about buying. Here's what actually happened and why Bitcoin crashed so hard. We were at an all-time high around $126,000 back in early October, and now we're down over 31% in just 6 weeks. That's brutal. This is actually Bitcoin's worst month since the Terra Luna disaster in 2022. Every gain Bitcoin made this entire year just got erased. We even touched below $81,000 a couple days ago. If you're holding Bitcoin through this, I feel your pain. But here's why you shouldn't panic sell. The on-chain data, which is basically tracking what's happening on the Bitcoin blockchain itself, tells us a completely different story than the price. We're seeing over 102,000 large transactions above $100,000. There are about 29,000 transactions over $1 million. These are whale-sized moves. The number of addresses holding more than 1,000 Bitcoin went up by over 2%, the most we've seen in 4 months. Big institutional players who hold thousands of Bitcoin accumulated over 45,000 more Bitcoin just in early November. You know what this means? While you're scared and thinking about selling, the people who actually move markets are buying as much as they can. This happens at every major bottom. Let's talk fear, because this is important. There's something called the Fear and Greed Index that measures how people are feeling about crypto. Right now, it's at 10 to 11, which is extreme fear. The last time it got this low was June 2023. And if you remember, we had a massive rally right after that. When everyone is terrified, that's usually the best time to be buying, not selling. It sounds backwards, but that's how markets work. So why did Bitcoin crash in the first place? 2 big reasons. First, the Federal Reserve, which controls interest rates in the US, basically said they're not cutting rates anytime soon. Bitcoin and crypto love it when interest rates are low because money flows into riskier investments. When rates stay high, money stays in safer places, like bonds.
That killed the rally. Second reason is the trade war between the US and China heating up again. When President Trump threatened huge tariffs on Chinese goods, it triggered $19 billion in crypto liquidations. Bitcoin now moves with the stock market more than ever before. So when Wall Street gets scared, Bitcoin gets hammered too. The crash was also made worse by something called liquidations. Imagine thousands of traders borrowing money to buy more Bitcoin than they can actually afford, using leverage on exchanges. When the price drops, those positions get automatically closed, and it creates a domino effect. We saw over $3 billion in liquidations, which made the crash way more violent than it needed to be. Weak hands got flushed out hard. Now, here's the technical stuff, simplified. Bitcoin could still drop to $70,000 to $75,000 to complete this correction. But there's also a scenario where we've already bottomed and we're heading back up to potentially $100,000 to $140,000. The key level to watch is $116,000. If we break back above that level, it confirms we're going way higher. If we break below $70,000, things get really ugly. There's something called the MVRV ratio, which basically compares Bitcoin's current price to what people actually paid for it on average. Right now, it's showing we're approaching levels where Bitcoin has historically been a great buy. We're not at rock bottom extreme undervaluation yet, but we're getting close. Every time we've hit these levels in the past, big rallies followed within months. Mining is also important to understand. The Bitcoin network is still super strong, with hash rate near all-time highs, which means miners are still securing the network. But miner profitability just hit a 5-year low. Some miners are shutting down, which is actually healthy because it removes the weak players and makes the network stronger long-term. Here's something wild. Academic researchers studied Bitcoin's 4-year cycles based on the halving, and they predicted this cycle would peak in November 2025 around $124,000. We hit $126,000 in October. So the model was basically perfect. The same model says we should correct for months, maybe into late 2026, before the next massive bull run starts. This isn't random. There's a pattern here. So if you're thinking about buying, here's the game plan. Don't put all your money in at once. That's how you get wrecked. Start buying small amounts now, around $86,000 to $82,000, maybe 25% of what you want to invest. Then, if it drops to $80,000 to $75,000, buy more, another 50%. If it somehow drops below $75,000, go aggressive with your last 25%. And always have a stop loss below $70,000, because if we break that, something is seriously wrong. What should you look for before buying? You want to see the fear and greed index stay below 15 for multiple days. You want to see continued whale buying in the on-chain data. And you want to see a massive volume spike when the price starts reversing. That volume spike means we hit a real bottom where everyone who wanted to sell already sold. If you're looking to take profits on the way back up, here's where to sell. First bounce to $92,000 to $95,000, take some profits. When we get back to $100,000 to $105,000, definitely take more off the table. Major resistance at $107,000 to $110,000, sell more there. And if we somehow blast through $116,000, seriously consider getting out because we might be topping. Real talk, this is still risky. The Federal Reserve meeting in December could move the whole market. Trade wars could get worse. More liquidations could happen if there's still too much leverage in the system. This is not the time to bet your rent money. Be smart and strategic. Let me confirm what this chart is showing you is legit. The deeply oversold reading is real, backed by multiple indicators. The support at $80,600 matches what we're seeing in on-chain data. That risk-to-reward ratio of 3.29 to 1 is statistically solid for taking a long position here. Everything about this chart is pointing to a potential bottom forming between $75,000 and $85,000. Here's my bottom line. Bitcoin is in the accumulation phase. All the data, the extreme fear, the whale buying, the historical patterns, everything is pointing to a bottom forming right now. Could we drop a bit more to $70,000? Sure, but the big money is betting we're at or near the low. This correction hurts, but it's normal for Bitcoin. We've seen this before in 2018, 2020, and 2022. Every single time, Bitcoin came back stronger. The smart money is buying while retail is panicking. That's how wealth gets transferred. The question is, are you going to sell to them at the bottom, or are you going to buy with them? The setup is here. The opportunity is now. Do your own research, manage your risk, but don't let fear make you sell at the worst possible time. If this helped you understand what's really going on, hit that like button and subscribe, because I'll keep you updated as this market evolves. Drop a comment and tell me, are you buying this dip or waiting for lower prices? Let's talk about it. Stay smart, and I'll see you in the next one.